What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Black Friday. It's time for the weekend, and it's time for the FAANG Stock Recap Show here in the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week we had earnings from Nvidia. We had the Google fanboys crying over our video we posted a couple of days ago. They might not want to view the Google segment, as I've got employees spilling the goods on Google, but we better not waste any more time and kick things off like we always do. Meta Platform started the week at 337 or 338, and like basically all of these stocks trading sideways on a short-in and a holiday trading week. Not a lot of news out of Meta this week. Moving on to Apple, started the week at 191, slid down to about, we'll call that 190. This is on news that the Apple Vision Pro headset set to launch in January. I don't think we ever got a exact launch date, but this article, assuming that Apple wanted to launch that headset in January, now that is moved to March. I wouldn't be surprised if it gets pushed back again. Just to feel, I don't have anything other than a feeling there that a device like that could get continuing to get pushed back. Now, Apple's iPhone demand remains mixed. Saw a lot of different data as it relates to Apple iPhone. You had firm data out of China. In the US, you have kind of mixed data. I think we can all agree, if you look forward with Apple, their demand for their products is going to be stable, but it's certainly not going to reaccelerate. And so what's going to accelerate this stock up well north of a $3 trillion valuation? Certainly, if you look over the next 5 years, if you want this stock to outperform the vast majority of other stocks out there, it's probably going to push to like a $6 trillion market cap. Again, I'm talking about over the next 5 years or so. What it is going to take is likely new products, new services. Company still doesn't give any indication there. Now, Tim Cook saying that he might have some CEO succession plans, but he has no interest in leaving the company, and he's going to be there for, quote, a long time. Now, moving on to Amazon. Big day for Amazon. Obviously, they spent a bunch of money airing a football game, hoping that you stay at home and order on Amazon. We'll see if that strategy pays off when the company reports their earnings later into, I would assume, next year. Company started the week at 146 and some change. Like, again, all of these stocks on a shortened week basically have gone sideways. Amazon is looking to train about 2 million people on the skill set of AI. It's a program called AI Ready. I wanted to actually check this out. These are a lot of classes, both for beginners and even more experienced people. My guess is this is to basically provide a funnel to engineers maybe learning AWS. Now, Amazon's chairman, Jeff Bezos, he's taken his talents to South Beach, and he's aggressively sharing his shares of Amazon. Some people presume that maybe he would sell about $1 billion worth of stock. I think at last report that I saw him sell maybe about 250 million. Obviously, didn't have a huge effect on the shares. Now, iRobot, this is the deal that was in flux, and shares of iRobot were way below the acquisition price that the two companies had agreed on. But now iRobot getting EU or a planned EU approval for a sale to Amazon, and shares surged 39%. I tell you what, these arbitrage spread trades, they've actually worked out pretty well over the last year. You could have gotten Activision Blizzard at a steep discount. That deal closed. iRobot, even bigger deal. I think even VMware and Broadcom had not a large delta, but there was enough delta there to where I guess you could have made some money there. Moving on to Netflix, started the week at 468. This one up pretty nicely, up 2.5%. Finished the week at 480. Interesting from a technical perspective. Talk about that in a moment, but not a lot of other news out of Netflix. Moving on to the stock of the week. That was Nvidia. Started the week at 492, slid down by about 3%. Not a big move. 2% on the regular trade. Finished the week, we'll call that at 478. The company reported their earnings just a couple of days ago. We went in depth on a video that you'll see here on the channel. Revenue was up 205%. Even the guidance was well above estimates that were laid out by the company. My guess is you head into next week with Nvidia, the Wall Street analysts, which are more or less on vacation this week, they'll climb back into the stock. This EPS from a forward perspective will certainly go down. The stock's probably trading in the low 30s in terms of a forward PE, but will that be enough again, if you're buying shares or you're holding shares of Nvidia, forget about the past. It really doesn't mean anything at this point. It's about moving this 1.2 trillion valuation. And this is not just the case with Nvidia. We talk about it with Apple as well. You've got to double this valuation over the next 5 years for this stock to be worth it. In my opinion, if things go right, not even perfectly for Nvidia, probably have a good chance to do that. Now, company is delaying an AI chip ready for China. Company already has a series of chips that they were selling into the Chinese market. Those have met restrictions and sanctions from the United States government, more specifically the White House. Don't think that your congressperson actually voted on this. This came directly from the White House. Company is looking to make some other chips known as the H20, the L20, and a few other ones. Problem I have seen and I have read with this is these chips can be easily modified back up to higher performance specs. So Nvidia is trying to kind of put a band-aid on some of these chips, ship them into China, and then what China is able to do is kind of rip the band-aid off and make the chips perform at a higher speed. That's what they're doing with the kind of the current generation that they're able to get their hands on. And I think Nvidia is probably looking to make these chips harder to modify so they're able to just have a steady stream of these flow into the country of China. My guess, Nvidia being the great company that it is with like tons of great engineers, they'll be able to figure this out, and it will be a non-story as you head into next year. Taiwan Semiconductor Mole's building a third plant in Japan for its 3-nanometer process. They've obviously got one building out here in Arizona in the United States, and they've got some others planned around the world. I think as we start to look out 4 or 5 years, obviously you have that kind of Chinese-Taiwan risk, which I think is mildly overblown by most people, especially people that like pay really, really close attention to geopolitics. Sometimes that stuff is more hyped up in the media to scare you, something to talk about. I don't really think that's necessarily that big of a risk. I'm knocking on wood because obviously if China overtakes Taiwan, we've got some major problems in the stock market, particularly the tech stocks. But as we start to look out 5 years or so, the company is going to be slightly more broadly diversified. This certainly is good for Taiwan Semiconductor, but probably more specifically the ASML and the other lithography equipment makers that are going to be selling equipment into those new fabs. Moving on to Google, start of the week at 134.66, and this one was popping up 1.5 points. Finished the week at 136.69. Now, I posted a video earlier this week, rather critical of Google, and people were crying in the comments. I had to bust out the tissue and hand a couple of tissues out to people that don't remember Yahoo, don't remember Alta Vista, don't remember Ask Jeeves, don't remember the history of search engines, that these things tend to go down if you don't improve your product. And reflecting on 18 years of Google, this mirrors exactly what I've been in Silicon Valley numerous times over the past couple of months. I've stayed right next to Google's headquarters. It's a beautiful hotel right down the street from Google's headquarters. If you look it up on the maps, you probably tell where I've been staying. This mirrors exactly what I've heard from virtually every employee. This is a direct quote from a 18-year Google employee. Much of the problems at Google today stem from the lack of visionary leadership from CEO Sundar Pichai and his clear lack of interest in maintaining cultural norms at the early Google. This is what I've been hearing. Now, does it mean the stock is going to zero? Does it mean Google's still not a great company? No, but what you aren't going to hear a lot of criticism here on YouTube in particular are a lot of creators afraid of getting demonetized, afraid of a video not getting pushed out to the algorithm, this, that, and the other. I don't care about any of that. I don't care about the money that these videos make. I don't care about the views that they get. I don't care how many subscribers I have or I don't have. I'm here to give you the best advice, and go talk to anybody that works at Google or anybody close to Google, and they're telling you that they have cultural problems. And then when we looked at the last week, we'll get to Microsoft here in a second, look at the last week of events, Google was out to lunch. Google was on vacation while many other AI players were playing ball. Moving on to Microsoft, start of the week at 375. This one pushed, I believe, to all-time highs earlier this week, but closed near them, up about 0.5% at 377.43. Sam Altman, who was back and forth between the tech giant and the OpenAI startup, he is returning to OpenAI with a new board of directors, certainly maintains the status quo. I actually think this is the worst outcome probably for Google, because if OpenAI effectively we could have seen OpenAI effectively dissolve itself as a company this week. If it lost Sam Altman, if a lot of the other employees defected, eventually that company could have dissolved. And then Sam Altman obviously could have gotten things up and running at Microsoft, probably would have taken 4 to 6 months, the estimates that I would have seen, but that would have given Google some time to kind of catch up. Now he's going to maintain at OpenAI. There's probably going to be an emphasis or a re-emphasis and a re-acceleration of what they were doing, considering they now have a board of directors that is probably going to be more in line with what Sam Altman is looking to do, rather than the virtue signaling scaredy cats that were in the board of directors before Sam Altman was fired and then rehired. Now, the board was warned, this is the previous board, of an AI breakthrough that apparently has people all scared, project called Q, that could have some maybe some AGI-like capabilities. Obviously, this is very exciting for OpenAI, exciting for the tech industry, but obviously for other companies out there, if this is true, that OpenAI has something very powerful in terms of breakthrough coming, that certainly could be detrimental to the other tech companies out there, which definitely seem like they're not close to that type of breakthrough. Moving on to Tesla, start of the week at 230, call that 234, up about 5% or 0.5%, finished the week at 235. Now, Elon Musk and other Tesla engineers were reportedly or allegedly aware of an autopilot defect, which tragically took the life of somebody back in 2019 who was in a Model 3 and was on autopilot mode. This lawsuit allowed to continue to move forward, and we'll obviously see if there's any type of punitive damages coming to Tesla. Likely, even if they do, you are looking at an amount for a company worth $744 billion, likely to be at least whittled down in the Court of Appeals to a manageable amount of money. Obviously, our thoughts and prayers are with the family who lost a loved one. Tesla plans for India appear to be heating up. This is because I believe India has incredible import taxes on vehicles, so Tesla more or less has to set up a facility in that country, and that would be likely pretty bullish for the company if they're able to pull that off. Moving over to the technical segment of the show, S&P 500 has made a beautiful bounce off the bottom, now retesting highs that we made back in July here. If you want me to make a prediction mode, get out my Miss Cleo ball and my Magic 8 ball. I'm saying we get rejected here. Come test an area back down here, about 4,300. A push higher would be incredibly bullish. All the bears and the recession mongers would be tragically wrong, as if you break higher than the highs you made back here in July, you're retesting up here at 4,800, almost guaranteed. And what we do know about the stock market, it's not really the viewers of a program or a channel like this, but you start retesting the highs up here, you have the potential to continue to move higher, since most people buy into stocks at the top of markets. Again, what you're supposed to do from investment perspective is buy low and sell high. The average retail, not even the average, the vast majority of retail buyers actually buy high and then they end up selling low. I would actually be a seller of stocks up in these levels. You start retesting these highs, I would be looking to sell. Again, that's not a broader commitment to a recession or a market that crashes or reverses at that point, but I just like to sell at highs, since that's usually when the retail crowd is looking to buy. You like to sell into retail and buy when they are selling. Moving on to Meta, this one looks great. We have gone sideways here, but we've broken, as you can see here, we've kind of peeked our head out above. Looks like to me this one wants to walk back to all-time highs. Again, if the S&P 500 breaks to highs, Meta will do the same. It'll climb up here to 390. And again, that is when, who knows what happens when you come up here and retest highs. That's when the headlines will cross. That's when retail will pile in. Sometimes you can have like another push higher as it relates to Meta. Moving on to Apple, also looking very good. Broke to new highs, back test just below them. Now we're pushing back up to those highs with Apple, but more or less you're consolidating between, we'll call it like 170 and 190 with this company. You've been doing that for the last 4 or 5 months. Do you get a solid break above or a solid break below? nothing is really new as it relates to Apple. Same thing with Amazon. We've been stuck in a tight range. Jeff Bezos is hoping this one pushes back up into this consolidation range, up back into the 170s. Certainly if you have the S&P 500 and the vast majority and Apple and most of these stocks continuing to push higher, this one will inch its way back into the 160s, 170s. That's probably holders of Amazon stocks clue to not sell your whole position, but you probably can take some profits there along with Mr. Bezos. Moving on to Netflix. Talk about this one for a while. We were in this beautiful uptrend. We had a decisive breakdown. We've been calling for a back test of trend. That's exactly where we're heading now. We are like next week. We are anticipating that, not all in 1 week, but we're anticipating getting rejected here with Netflix, probably pulling down here to 343. That'd be the first area where I'd get excited. Not that I would go all in, because there's other areas down here at about 300, which are probably slightly more exciting than that. Now, the opposite could happen. We could just break right back up into trend with Netflix, and that would obviously be, I mean, if Netflix does that, the rest of these stocks are moving back to their higher zones. Moving on to Nvidia, some concern this week, but stock's been making a very predictable pattern really since June. So you've about a 5-month trend where you've traded precisely between $400 and we'll call it you had a $100 trading range with Nvidia. The sellers just step in here at 500, push it back down here at about 400, and the buyers step in like clockwork down here at 400. So with Nvidia, you're looking to add to a position or start a position, I'd wait until they push this thing back down to 400. You pick it up down here, and you just be patient with this one. Given that the earnings were just reported, the China conflict, the fact that the expectations are already baked into the share price, I don't see a lot out there that can just push us up back up to like 600 or something like this on this stock. Any kind of push higher is just going to bring on more sellers, as a lot of people have big gains in share price like that. Moving on to Google, this one looks okay. So we had this large uptrend that we're in. I'm keeping this red line, which I'll change to purple really quick so we can reference it. That's like our Netflix line where we had a decisive break with Google, but now we're back testing to trend, and we're in the same place with Netflix. We're either looking to squirt back up into trend. You do that, man, you've got some room to run. You've probably got all-time highs coming back into play up here at 150 with Google. Get rejected at this level, you'd like to see the shares find support down here at 125. They find support at 125. That's your buying spot for Google. Moving on to Microsoft, this chart looks it's not even close. This is absolutely the best looking chart. You're making decisive higher highs. I mean, the higher lows are kind of a boat shape, if you will, but you are back on a very, very steep uptrend with this one, as the company is taking 30-year-old software, like 40-year-old software, and they're charging users $30 extra per month, and people are going to pay for it. That is a brilliant business model. Now, some of you out there are saying, oh, well, Copilot sucks and Word sucks. It doesn't matter what you think. It matters on gross margin, profit, and the amount of companies and enterprises out there that are going to look at other competitors that have Copilot installed, and then they're going to look at their staff and realize, well, it's only $1 a day per person to have this installed. I might as well do it. And then when we start to look forward a couple of years from now, Microsoft is going to basically force everybody into this upgrade cycle, and that is pushing shares higher and higher, let alone the fact that they have access to likely the best AI technology known to man right now, and they're going to be applying that to video games in their Activision Blizzard acquisition. That is going to push shares likely continuing higher. Now, Tesla has always been a little bit different spot. Since 2021, I mean, we're now on 2 years of lower highs. You're in a 2-year downtrend with Tesla. More recently, though, you've made a beautiful series of higher highs. With Tesla, you're looking for a break higher. You got to push above 307. You push above 307, that would take out the downtrend that you're in, and more than likely you're in that type of channel and an uptrend. Till the stock can prove that it is in that type of formation, you actually have to assume it gets rejected at this level. Complicating the situation is we are starting to wedge out. So we are expecting Tesla by the end of the year to decide to break down. You break down, you get buying opportunities below 165. you break to the upside, you probably have selling opportunities as Tesla tends to bring in that retail crowd when it goes on a rally. I like to sell to foaming at the mouth retail buyers. Maybe next week's Cybertruck delivery, which I'm unfortunately not a part of. Elon Musk did not call me, must have lost my phone number, as I do have a reservation for one of those beautiful looking pickup trucks. Folks, hopefully you had a wonderful Thanksgiving and a great Black Friday and a great weekend. I will see you again next week. Until then, have a safe week and good luck with your investments.